So good morning, everyone. So the today topic what we are going to see is Provident Fund. So we'll have just a glance about the Provident Fund. So what do you mean by a Provident Fund? It is nothing but it's a scheme. Is a scheme intended to give a substitutional benefit to an employee at the time of his retirement. Under this scheme, specified sum is deducted from the salary of the employee as a contribution towards a fund in which the employer also will contribute the equal amount to the provident fund of an employee. So the employer is generally contribute the same amount of his pocket, and in case of death of employee, the sum is the same is paid to his legal hiree. And there are four types of provident fund we have. So in which first one is statutory provident fund. So where here we have to basically we have to see the three particular information which is applicable for the taxation purpose. Okay, so in which first type of provident fund is statutory provident fund, so which is applicable only to the central government employee, and in which whatever the contribution made by the employer towards this which is not taxable, and employee whatever contribution is making which is exempted, and which he can claim that as a deduction under section 80C. Okay, and next is recognized provident fund. So this is applicable to the private companies, and in which if an employer contributes towards that, then 12% of the salary is exempted, and whatever the contribution made by the employee, he can claim that as a deduction under section 80C. So first one is statutory provident fund, and the second one is recognized provident fund, which is called as RPF, and the third one is URPF, unrecognized provident fund. Here also a private company only eligible, and in which is not taxable and which cannot be considered only when it comes to the name only says it is not recognized. So whatever the employer contributing towards this, nothing is considered as. Okay, so that is the reason this is not taxable in that year. And next is exempted from tax. So what is that exempted means? Whatever the amount employee is contributing, that amount will be exempted from the tax. Next is public provident fund. So this is a fund in which anyone can contribute, no matter whether you are an entrepreneur or an employee. As an individual you can contribute yourself, whereas other three are it's an account which is opened only for the working employees, but here it is not. The public provident fund anyone can contribute. So in which whatever the contribution employer making, he doesn't contribute anything because it is applicable for the individual. So individual he has to contribute for himself. That is the reason. Next is exempted from tax. Okay, so these are the four different types of provident fund what we have. Okay, thank you.